Hi there, trader. Welcome to my weekly analysis of the Forex market. This is the last week of 2016. We're going to take a look at the charts in just a second. First of all, though, be aware of this disclaimer. This video is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more info on that. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more info on that. This video is for informational and educational purposes only. By continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. Alright, I want to kick off the video here with pound USD. Looking at the 1 hour chart, we see a very neat bearish trend channel at this moment with multiple hits actually on both the up and downside. I think this channel is strong, but I must say that there is double divergence when looking at the bottoms. You can see the oscillator here pretty strong in the first fall, or the second fall I should say. The third and fourth substantially less strong, which is indicating divergence, double divergence at the moment. Therefore, I think there is a chance of a retracement back to resistance at this point, and even perhaps a break above this channel. However, I do think, generally speaking, that a small channel break is not significant. I think ultimately this is in the downtrend, and price could easily turn at this resistance zone right in here at the R1. I'm talking about this consolidation box, which is now turned into resistance. We have bottoms here as well, so I think that's a sturdy resistance zone. That zone, let me take a look at the levels here exactly. 123.25 up to 123.75, 124. The R1, R2, of course, giving confluence. Long-term moving average here as well. So I think that could be a turning spot. At this moment, you can see price breaching through the Admiral Keltner indicator several times, 1, 2, 3. Now I think it could be a bouncing spot. And the top of that Keltner could also be one of those resistance spots as well. So the pivot point here, plus basically the top of the trend channel, the bearish trend channel, that's one resistance point at 123. The second and third layers would be the R1 and R2. So the Keltner and pivot point could be actually the first turning spot of 123, and it does not have to break above that. And that could be already the turning spot for a downtrend continuation. So I'm going to keep an eye on all three of those spots, see which one price uses for a downtrend continuation down to 121.50, 121, perhaps 120 on the pound USD. All right, it might be holiday season, but Nennet and I do have webinars scheduled this and next week. Nennet will have his weekly recap probably on Monday, but keep an eye on the agenda because it might shift towards another day. Tomorrow, though, Tuesday, it is the future of the euro. Gloom or glory is our review of the analysis of the euro. Wednesday, Nennet takes a look at wolf waves. Next week, we have weekly recap, price action and patterns, and forecasts for 2017, looking at the Forex commodities, stock indices. What do Nennet and I expect of the upcoming year? So that's all in the next 2 weeks. Hope to see you in one of these webinars, of course. All right, next on the list, euro dollar 4 hour chart. You can see clearly in the consolidation at the moment. There was a big break of the support, I should say, sorry, and we had a retest, continuation, and another double retest. So as long as price stays below 105, 105.25, we got big bottoms here. I think that is basically bearish. This huge downtrend, of course. So as long as price keeps moving sideways, it could be just some slowdown. But as soon as price breaks through support, I think there could be a downtrend continuation with the euro dollar. Now, that does not have to happen right away at the market open this week. That could consolidate before there could be a break later this week, maybe even next week. We'll have to see when that breakout happens, and price could retest, I would say, the resistance up in here about 105, 105.50. Now, if it goes further than that, I still think it's bearish, to be honest. The entire formation is in a downtrend, and as long as price basically stays below these resistance spots here, I don't see any reason to change that analysis. We'll have to see, of course, just how far it retraces, but ultimately I'm looking for a turning spot for downtrend continuation on the euro dollar, and I don't think that any push up even to 107.50 changes that. I just have to see how far that push up goes, but ultimately I remain bearish. Last week was basically a doji, but a bit of indecision there, slip of the Dutch right in between the English text, but basically the break of the bottom has occurred, and I think that any bullish retracement that does happen is just a retracement for more downside and a continuation to 102.50, perhaps parity 100. That I think could probably happen more next year. Obviously, there's only a few days left. I don't think it will fall to parity this week, but next year I think there's a good chance of that, and that's something that Nenad and I will discuss in the forecast video or webinar next week, Thursday as well, on the 5th of January. But ultimately, even if it makes a bit of a bullish retracement, I do expect it to run into resistance and turn back down. That same kind of vibe or analysis is valid for the AUD USD as well, where price is basically in a downtrend. There is, however, just like the cable, just like the pound USD, some divergence, single divergence here, and therefore there could be a bit of retracement back to the pivot point at 72.25. There's a resistance zone here and a bottom here. So I think that that could be a turning spot for price to fall. Now, if I'm wrong and the retracement does not occur on the pound USD, on the AUD USD, then in that case, of course, I'm going to keep an eye on the bottom. I'm going to keep an eye on the bottom here, see how price breaks through that. If there's some good candles like that, I will look for lower time frames, maybe some small push continuation. But ultimately, I think it would be more pleasant to trade if it makes a bit of retracement first, and then kind of runs into that resistance, and there's a rejection, and then a continuation. That's much more pleasant, I think, from my perspective. The dollar yen, last but not least, strong weekly candle last week. Nothing indicates that this bullish momentum and uptrend is running out of steam. And on the daily chart, we do see a bit of consolidation here, but it's going sideways. It's a mild correction, just like we had here, right? That's typical for the dollar yen. And in that regard, I think that's just more of a confirmation of upside than anything. So looking at the 4-hour chart, you can see triangle being built at this moment, a pennant, clear uptrend and momentum. You can see the moving average indicating that too. The oscillator is all bullish basically. So what I'm looking for is a break above resistance right here would be an uptrend continuation, or of course if price manages to retrace a bit lower, any of these fibs could be bouncing spots on the dollar yen, and therefore valuable turning spots for more upside, right? So if price is at the 61.8, 78.6 fib, bouncing spots for that uptrend continuation on the dollar yen as well. As long as it stays above these bottoms and tops here, 115, 114.50, 75, I'm bullish on the dollar yen as well. All right, thanks folks for joining this video. Of course, hope to see you in the webinars as well. For more information and analysis, please visit admiralmarkets.com. Wish you great trading and talk to you soon. Cheers.